Good day to you, and welcome to Adssure's short explainer on Fidelity Insurance. My name is Mike Addison, and I'm representing Addsure, sectional title insurance specialists, and we are an authorized financial services provider, license number 15269. Okay, so as I mentioned, this is just a short explainer on Fidelity Insurance. We're not going to go into any detail or too much history or any details. It's really an over-the-top overview. Our achievement here, or what we want to achieve rather, is what is Fidelity Insurance and then how to deal with it for your community scheme. Okay, so what is Fidelity cover? Well, I always say it should be called infidelity cover. It's really, in a nutshell, insurance against employee dishonesty. So it was designed for businesses originally to protect a business against employee dishonesty. In the insurance context for sectional title or homeowners association, that isn't good enough. So new legislation that came into effect at the end of 2016 extended the fidelity requirement. It made it compulsory for bodies, corporates, and HRAs and other community schemes. And now every community scheme must insure against the risk of money belonging to the community scheme by way of dishonesty by certain people, which includes the scheme executives, in other words, the trustees or directors' dishonesty, an employee dishonesty, or managing agent or contractor dishonesty, as far as the contractor, like an estate manager, might be controlling certain monies. Okay, so as I said, I'm not going into too much detail. There's a lot more detail in our booklet. Our booklet explains many things. If you go to addsure.co.za, you can download this booklet and you can refer to pages 5 to 7, which tends to the legislation, and then pages 26 to 27 explains it in more detail, and that explains the conditions of the policy and what must be met. Okay, very important that your broker provides you advice in terms of the fidelity cover, so that you, as the portfolio manager or person who's arranging the cover, can rely on the insurance broker's advice in terms of this. Very important. And when you look at a slide when we close off just now, you'll see how important this advice is. Our advice alludes to a fidelity cover. It's one of the three main insurance aspects for community schemes: buildings, liability, and fidelity. Fidelity being critically important, and we always speak of this in our advice, our annual advice as well. Okay, so prescribed management rule 23.7 in terms of sectional title, and then the CSOS regulation 15.3, which applies to bodies corporate and HRAs. Okay, so the community scheme sub-regulation 15.3, I should rather say, sets out the minimum amount and obviously sets out more. I'm only alluding to sub-regulation 15.3 on how to, in other words, the minimum amounts, and then prescribed management rule 23.7 speaks to a general meeting deciding on how much cover. So reading the two together for sectional title schemes, you need to actually have the minimum amount right in terms of the CSOS sub-regulation, minimum amount, and then at your actual AGM, you decide whether this is enough. That is our interpretation, and the market seems to have followed that interpretation pretty well. Okay, so if you look at prescribed management rule 17, which sets out the compulsory agenda, you'll see there it alludes to determining the extent of insurance cover by the body corporate in terms of rules 23.6, 7, and 8. 7 is the fidelity. So yes, you have to discuss it at the AGM, both mentioned in rule 23.7 and of course prescribed management rule 17 itself. This is a snapshot, or a screenshot rather, of the agenda. I think it's for my own body corporate where I stay. The managing agent has set this out very well. I'm very impressed. They mention the words liability, fidelity, not just the rules 23, 6, 7, and 8. By just mentioning the rules, very often this is overlooked, actually use the words liability, fidelity, and additional cover, just to make sure that these items actually do get raised by the chairperson at the AGM. So if you look at regulation 15.3, it sets out the minimum amount of fidelity cover. So how do you work that out? It's the total value of the community scheme's investments and reserves at the end of the last financial year. So where you're going to find that? You're going to find that in the financial statements. And then 25% of the community scheme's operational budget. Where you're going to find that? In your budget that you're preparing. Okay, so if you look at the financials, I go to what I call, I'm still old-fashioned, I go to the balance sheet, called the statement of financial position as at the year end, and you can have a quick peek. I just take the assets, and I take the current assets, or cash or near cash, obviously your investments and your reserves, what they're speaking about, it amounts to the money that you have, the amount of money you have in investments, in your bank account, and I always include your cash or near cash. Near cash, I would consider to be your outstanding levies. You might convert this into cash. So one day it might be, outstanding levies. The next day you might have actually discounted this, or the money might have come in miraculously, and you've suddenly got all of the amount of money in your bank account. So I would consider A to be the 445,790 there. Then you look at the budget, and quite simple, really, looking at it. So what I do is I look at the total expenses, being the operational budget. You have to knock out the non-operational items. What's non-operational here? Well, I'd say where the cross is, and that would be your reserve fund levy expense that they've accounted for. Knock that out. So 1.233 million less 192,000 should give you an operational budget figure that we're looking for. That's my view. It's my interpretation. You might do a slightly different calculation, but by and large, I follow this route of explanation. So the community scheme's investments and reserves at the end of its last financial year, I have as 445,790, and I have the operational budget. As I explained, I took the figure, I knocked off the 192,000, which was non-operational. I got to 1,041,000 odd. 25% of that, 260,000 odd. A and B, 445,000 plus the 260,000, and I have our figure, 706,128. So 706,128, you can round it. So I don't think it's going to make any difference if you just say 706,000 and you then apply that as your fidelity figure. You take that to the AGM, and better still if you do it straight away. Good time to do it is straight away after when you receive your draft financials, you prepare your budgets, you get your figures together, and you send it to your broker. Try and get your broker to do it for you and advise you accordingly. That might be a way to pass the buck in a way. Addsure certainly does that. Portfolio managers that work with me just send me their budget and the last financials, and I do this quick calculation for them. And then they know that it's been done by the financial advisor. That's what your insurance broker is, believe it or not, a financial advisor, and they should be able to do this short arithmetic. Okay, so the part that worries me is that many managing agent contracts with your clients have actually state something like this. This is a cut and paste from the last NAMA template that I saw. The managing agent will arrange the insurance of the buildings and improvements for any other insurance and for any other insurance a community scheme may require. So some managing agents, if not all, actually contract with their body's corporate, saying that they will work this out for them, essentially. And you do prepare the AGM packs usually, and you do prepare everything. So one, as a trustee, would expect that the managing agent would have this in order. Now that's pretty important. When you look at, what a definition in the policy of theft, dishonesty, and computer crime actually is and what they'll pay for the loss of funds sustained as a direct result of any criminal act which occurs during the period of insurance. So the policy is in force, and there could be fidelity cover. It could be for a very small amount. I've seen one sitting at 10,000 Rand only, And after the AGM, it had to rush up to about 950,000 because it was done incorrectly the year before. Imagine if the managing agent was being relied upon and they had just ignored it and had just left the default Fidelity cover in place of 10,000 Rand, and there was a fraud in between. There could have been a huge problem. And I can tell you now that managing agent would definitely be held responsible in that instance. As I've mentioned before, if the contract specifically says that you will do those things. Okay, so thank you very much. That is a wrap. I've tried to keep this short and sweet. And if you need to go back, obviously you can just go back and read the stuff that I've told you.